Hi, ladies and gentlemen. Welcome back to another episode of GRG Talks. We have two very special guests in the house. They are not actually realtors here at Green Realty Group. They are actually lenders with Olympia Federal Savings. I have Natalie Reed and Lindsay Bomba. Say hello to everyone.
Good morning.
Hello.
So, Natalie and Lindsay, tell us a little bit about yourselves. How long have you guys been with Oly Fed?
Yeah. I started Oly Fed August about 2.5 years ago. I started off as a universal banker and just worked my way up into a loan officer role about 1.5 years ago.
Yeah.
So It's been wonderful. It's a great family and big group of people.
Awesome.
And I've been with Olympia Federal for almost 20 years. I also started in our retail branch as a customer service representative, and I've had many different positions in the association. My current role is branch manager at our downtown location, where I also do mortgage loans.
One of the neatest things, before we dive into all the questions, that I do have to say about Olympia Federal is how local you guys really are. I think that's been one of the strengths of your guys' organization. Can you talk a little bit about how much Oly Fed prides itself on being really a local part of this community?
Absolutely. And that's definitely one of our founding values is that we are here locally, and everything we do is about supporting our community and giving back to our community. We're definitely a community partner with all different businesses, customers, community members. So that is at the very foundation of how Oly Fed was built and what we do every day.
Yeah, I think it's great because it's not a giant sort of based out of somewhere else. You're not quite sure where your loan is going, all these sorts of different things. It's really localized, and people can, have faith that you want to do well because you're a part of the community, which I think is really, really neat. We're here to talk today about sort of lending. We'll go a little lending 101, but we'll also talk about some of the different loans you guys are seeing in the market now, especially since all these sort of times are changing and everything like that. But first, we'll dive into sort of a real high overview of exactly how lending works. So, Natalie, we'll start with you. Can you talk a little bit about how the lending process when someone has finally found a home and they're ready to dive into that part?
Yeah. Typically, we like to start borrowers off with a pre-qualification before they start looking for a home. At least then we can know where they sit and what they can afford, look at credit, income, all of the above.
Yeah.
Pretty usual.
Yeah.
Once we obtain that pre-qualification initially, we will go ahead and offer them a pre-qualification letter, and they can provide that to their realtor. We can make numerous different ones depending on their offer prices as well, so there's some adjustment there. And then once we have the purchase and sales in hand and an offer accepted, then that starts the loan process. We're typically a 30-day closer depending on the loan type. I will say if it's construction, that's a whole different ballpark.
Right.
But purchase,
That's its own podcast.
Oh, that is, another day.
Yeah.
30 days is pretty usual.
How much easier is it for a person, because you mentioned it, getting pre-approval and then going out shopping, than it is to try and scramble for the loan afterwards?
It helps in the fact of different houses will have different tax breaks. Also, being able to adjust that on like a month-to-month basis. What if something changes in the market or income or rates? That can change their amount that they're qualified for.
Right.
So that letter that was done a month ago might not be applicable to 2 months now.
Right.
So
Right.
Try to stay current.
Do you typically, is it more likely that you're going to get just a buyer looking for a home coming to you, or is it typically the agent acting on their behalf?
Lately, I've had a lot of agent referrals.
Yeah.
So that's all of what's in my pipeline right now. Very proud of that.
Yeah.
But there are times they'll just walk in or just call the branch and just like, oh, hey, let's speak to the loan officer.
Yeah. How important is credit score and debt to income ratio when applying for a loan? Because I think that is one thing that people sometimes, they hesitate because they think to themselves, well, I don't know if I even have the credit to go out and get a home.
Yeah.
How important are those two things when you're looking into getting a loan?
They're both very important. I will say we do have private mortgage insurance for anything that borrowers bring in less than 20%. So we do have to follow their guidelines on credit score. However, if they bring in 20% or more, then Oly Fed does have a lot of kind of wiggle room in there. We look at the whole picture, not just the score. We're not credit score based. So
Yeah.
their history, how long they've had a trade line open for, are there any late payments,
Right.
you know, et cetera, et cetera. Regarding credit, though, debt to income is very important. We are a little bit more conservative, but we want to be able to see borrowers can still afford a home. Also, first-time home buyer, make sure they can still save as well as make their monthly payment. So they both go hand in hand. We're not as strict on credit score, but DTI is still very, very important.
Okay. Okay. Yeah. And what about, you hit on it a little bit, and I find this one interesting, down payment. So sometimes a person will hear like, should you probably bring in 20 to 25%, and they're like, what? How's that even possible?
Correct.
Can you talk a little bit about down payment and how that works a little bit?
Yeah. All of our purchase loans require a minimum of 3% down. So they always start with essentially equity already in their home with that 3%. Anything more than that is great, especially with PMI. You know that their premium is going to be a little bit lower the more they bring in. Other than that, that's all we require.
So it's not something where like they have to have thousands and thousands and thousands of dollars ready to go before they can get a secure home loan. That's good to know, because I think a lot of folks sometimes that freaks them out a little bit.
It can.
Yeah. Lindsay, can you talk a little bit about the rising interest rates? We are in a weird climate where we're not quite sure where we're going next. There's hints one way and there's hints the other, but what we do know is the interest rates are higher today than they were 2-3 years ago. How has that affected lending as you see it?
Yeah, you know, it's interesting. Although we are seeing rates higher than we saw a year ago or 2 years ago, where we're seeing interest rates right now is not really that uncommon. We have seen interest rates in, you know, the 5, 6, and 7s in the past. I think what has happened is over the last couple of years, everyone got really comfortable with those 2, 3, 4% interest rates. So then, of course, when we did see the big increase, it was definitely a shock.
Yeah.
But again, it's not something that is abnormal. We have seen these rates in the past. What has, I think, definitely affected lending when it comes to interest rates is obviously how much people can afford to borrow now. As Natalie mentioned, when we look at debt to income, we're looking at how much that borrower can afford based on their income. And as interest rates went up, it obviously increased their payment based on how much they wanted to borrow. And in some cases, maybe now they can't afford to borrow as much as they maybe could a year or 2 years ago. However, on the positive side, what has happened with rising interest rates is it has allowed borrowers a little bit more time in the market to maybe find something that that they would definitely want to buy. I think a year ago, borrowers were feeling like it was this frenzy where they just had to put in offers because things were going so fast and there wasn't so much on the market. So I think from a buyer's perspective, it's given them a little bit more time, a little bit more room to shop around a little bit more. I think there's definitely affordable homes out there, and there's definitely a lot of buyers who maybe thought that they couldn't buy a home even when interest rates were lower, and they come to us and we talk about all their options, and they do find that they can still buy a home, and there are still homes out there that they can afford.
Yeah.
So
it felt a little bit like it's a really interesting one, because like it's all about perspective, right? Because in the early 80s, interest rates were what, like 20%,
Exactly.
something bananas, right? And then of course it's going to feel different if you go from like 1 or 2 to up to 5 or 6. It definitely feels that way, but perspective wise, 5 or 6 is still manageable interest rate.
Right.
No, yeah. One of the things about interest rates that I heard the other day was interest rates should not be one of the reasons why you decide not to go out into the market and look around, in part because the point that this person was making was lock in the home that you like with the interest rates as they currently are. If they fall, refinance. No, is that a good sort of method that maybe folks can use?
Yeah, absolutely. And I think most buyers will find too that they qualify for even sometimes more than they thought they'd qualify for. So definitely talking with a lender and doing that initial pre-qualification that Natalie had mentioned is a great starting place. And then that's always an option. Once you own your home, if the rate environment changes, you do have some options. It's not like you're stuck in that interest rate for a 30-year mortgage.
Right.
One of the great things about working with Oly Fed and what we do as a portfolio lender, because we hold all of our loans, we don't sell them on the secondary market.
And that's a rarity.
It is a rarity,
Yeah.
yes. And so because we're trying to build a relationship with our borrowers, and we want to keep that relationship through their whole, life of their loan, is we allow them to, if interest rates change, if they go down, we allow them to modify their interest rate without having to do a full refinance.
Oh, wow. That's awesome.
So it does save them money in the long run. It gives them that security that, again, they're not stuck in whatever the interest rate is at this point, that
Yeah.
they do have some flexibility if things change.
Yeah, that's awesome. You guys came in here a few weeks ago and talked a little bit about some of the different loan options for buyers that are still out there braving the market. And they were really, I know our agents found them really tempting, and I kind of was hoping that maybe you guys could talk about a few of those different loans, because I think that buyers don't know that these loans are still out there that are still kind of in their favor and can help them.
Absolutely. Yeah, our first-time home buyer and affordable home loan program has been, I think, all I've pretty much done lately.
Yeah, I bet.
Yes. One referral is from your office.
Oh, awesome.
So,
All
yes.
right.
Yes.
That's awesome.
Shout out to Andy. Our first-time home buyer is a lower origination cost. So initially for borrowers to get in a home, they don't have to pay outrageous fees in origination costs. It also has a lower interest rate. And in turn, there is no limitation on the loan amount on that one. Kind of gives them flexibility in where they're looking. So we can lend any side of the mountains over here, anywhere up and down I-5 corridor. So that really gives them leeway to shop wherever.
Oh, that's awesome. Yeah. Okay,
Yeah.
great.
So it's kind of nice. I grew up a little bit further south, so that helps me kind of network that area in turn. And they're like, oh, you're just in Olympia. Nope, not at all.
That's great. That's really cool.
Yeah.
Awesome.
And then our affordable home loan program is the one I think a lot of the agents have been really trying to push for.
Right.
And that one has a very low origination cost. The rate is still under 4%.
Wow.
It's really helped Thurston and Mason counties. We still have to follow income requirements, of course, for the whole household. So there's a little bit more limitation there. And there is a maximum loan amount we can do on both of those. So I think that's been the only struggle, is still with the market prices being pretty up there at the moment.
Yeah.
It is hard to find that inventory. They are still out there, so there are options to do, whether that's a purchase remodel or if someone's allowed gifted funds. There has been some leeway in that.
Yeah.
It's a great program overall.
Yeah. Oh, those are both two really good ones. I mean, the challenge always comes right now, especially with inventory-wise, finding one that matches what you like. As we close out here, and want to thank you guys for coming. Is there anything else about Oly Fed and lending that you would like our listeners to know?
Yeah. I just wanted to touch that Oly Fed isn't just a lender. We are a full service bank. So the idea is not only do we want to establish a loan, but a full relationship with that customer. We have deposit accounts, business account customers. We have a full commercial team available locally as well. It's just a great team. And again, like touching on the community point, we are so involved with the community, supporting nonprofits, and I think we hold quite a few of the accounts as well. So it's kind of that true joy when you get to just walk around town and you're like, oh, we've helped them. And we just really try to establish that main relationship with our borrowers in turn. But
yeah, it's really cool. I mean, it's really neat to have a bank that feels like, a bank that our parents grew up with. You know what I mean? It was local. It felt like your money wasn't going to float out someplace else. You didn't know where it was. It's just really neat to have a bank like Oly Fed around that cares very much about the people who live near them, which is really neat. Lindsay, Natalie, thank you so much for coming on the podcast today and talking about lending.
thank you, Philip.
Thank you for having us.